So if you've got any questions and specific areas that I haven't covered in this very general broad brush presentation for today, then don't hesitate to connect with us via social media. Feel free to drop me an email or a WhatsApp, pop into the office over here, one of the other offices in the Western Cape. We've also got offices in Johannesburg, Durban, Paarl, and Cape Town Central as well. And like I say, it doesn't cost anything to have a discussion with us. We'll have an introductory meeting with you free of charge, and we can talk through what your thoughts are and benefit from the experience of several hundred other expats that have followed you and are current clients of our team here in South Africa. Okay, we're going to move on to the Q&A section now. So if you haven't already done so, feel free to ask a question using the Q&A button. It's the bottom of the screen on Zoom, and you can just type in a question there, and I'll do my best to answer it now. If you want to send one to me via WhatsApp, you can just scan this QR code that's in front of you now, and that will allow you to send us a message to where I'm online here at the moment. Okay, let me just stop sharing that. There we go. All right. So first question here I've got from Johan. Johan, thank you very much for your question. One of the key ones that I often get asked is the pension income and getting that free and tax-free in South Africa. Sounds too good to be true. Yes, I can tell you a little bit more about that. Okay, so with UK pensions, they're currently designed for access normally at age 55 if you have a typical defined contribution scheme. If you have a defined benefit scheme, it might be slightly later in life. But when you take that income or when you draw down on your pension, you normally have three choices. You can go and buy an annuity, very similar to the South African system, but you can also withdraw it in chunks, so what's called drawdown, or you can actually withdraw the whole thing, which is full flexi access. Doing so will attract income tax, but the key point is the UK will give the taxing rights under that DTA that I mentioned earlier to South Africa. South Africa chooses not to tax those, and like I say, the exemption, that 0% exemption, has been in the Income Tax Act for a number of years. The most recent update we had from SARS is a general binding ruling, so that applies to everyone in South Africa, dated March 2017, I think it was. So again, that's been in place for a number of years, and it doesn't look like that's going to change anytime soon. So yes, what we would encourage you to do is apply for the appropriate paperwork with SARS and HMRC, and then your pension income can be paid to you tax-free from when you can access it. So currently age 55 for most schemes. From 2028, that's likely to rise to 58. Sorry for people like me in their 40s. We've got to wait a little bit longer, but statistically, we're likely to live longer anyway. So, so there's some good news there. So yes, it's not made up. It's absolutely true. You can live here in South Africa on pension income and not pay a cent in income tax completely legally. And that's why so many expats retire to South Africa. So happy to help you with that, Johan, if you want to ask some further questions. Okay, moving on to the next one. This is from Steve. Just explain how taxation works on rental income for properties that are overseas. Yeah, look, a little bit challenging for me to do. I'm not a tax consultant. I deal with this sort of stuff all day, every day, and I have a number of tax consultants that I work with that can provide you formal advice on your situation. What I can do is just give you very general information only facts, really, that you could probably find on Google yourself. It's quite challenging there. I understand that, you know, trying to interpret everything in all the different opinions is quite challenging. So generally speaking, the most important thing is understanding, firstly, are you a South African tax resident or not? Okay, and as a person that's been through this process, generally speaking, it takes about 5 to 6 years if you are a foreign national that moves here and lives here all the time. And that's the physical presence test. So there's 3 parts to it. You need to have been in South Africa for at least 915 days over the previous 5 years. you need to have been there at least an aggregate of 91 days each year over those 5 years that are assessed. And lastly, 91 days in the current year of assessment. So if you tick all three, not just one or two, all three, then you're almost certainly deemed a South African tax resident. And therefore, your primary government that you have to report to, or primary revenue authority, is SARS, not HMRC. If you're still reporting to HMRC and you have paid tax there, then what should then happen is that there's a netting off with what you paid in the UK against what you should have paid in South Africa. So by rights, you'd fall into the same category. No different to South Africans that have never lived, that buy investment property, and we've assisted a number of clients to do that over the years. As a foreign landlord, you get paid the income gross, and then you put it on your income tax return here in South Africa. You deduct expenses in the pursuit of that income, and then that's how it works. So very, very simple income tax principles. One of the key things, though, that is different is that actually you can claim interest against your mortgaged property if it's got an interest only, or any mortgage that attracts an interest payment, that can be deducted as an expense in South Africa, whereas the UK currently don't have that. And I say all of this currently with a very much a proviso that next week the government are about to no doubt change a number of elements of the budget. And what are we expecting? Well, I don't want to be a doom-monger, but it'd be much better to have another session. I am doing a session on the budget online in about a week's time. But on the property side, what's muted and expected is a significant rise in capital gains tax. Capital gains tax would apply if you have an investment property that you sell and you're still a UK tax resident point of sale. Does it mean you should go and sell your property today at a loss? No, unfortunately, the time has passed. We need to just let the government do what they're going to do now. And that's one area where things might potentially change. Another area that's likely to change significantly is how pensions are taxed and treated. And again, we'll cover this in that specific webinar. There's a lot of sort of word around the campfire, as I call it, within our industry as to what they may change, but we don't know for definite what they will be changing. Like I say, please tune in next week when we do our budget webinar. If you need the details, just ask for it in the comments below. Okay, I don't think there's any other questions in the queue. I don't think I've got any on WhatsApp here, apart from the ones we've already answered. So if you haven't got a question, if you have got a question, apologies, please do ask it now. I'm just going to put up our contact details one last time. So if you want to reach out to me, feel free to do so. Thanks again, ladies and gentlemen, for joining for this very brief overview on the things you need to think about to be financially fit to return to South Africa. I hope it helps. If you need assistance, please don't hesitate to contact us, and stay tuned for future events by following us on our social media channels to learn more about this exciting decision that I hope that you will be making soon. Ladies and gentlemen, thank you very much for your time, and hopefully speak to you soon. Take care.